Good morning, students. Welcome back to the session on advanced accounting. So today we are going to continue with our discussion on AS 17. We discussed certain concepts related to the segment reporting. In relation to segment reporting, let's do a quick recap. There were certain steps which are important, within which we need to just keep assessing our requirements in relation to the segment reporting. So first step was to identify the segments, and wherein we discussed that a segment is the one which is distinguishable. So it's a significant component of an entity which is distinguishable. Secondly, it will have its own risk and rewards, which are independent, and independent, and these risks and rewards are also different from the other components. So this is broadly how we will identify a segment. Now, once we have brought segments in place, what do we need to do? We need to get on to the segments which are required to be reported. Now, for the reportable segments, standard gives us the quantitative thresholds. Means there are three criteria. If any of those criteria will be met, then the segment will become reportable. And reportable segment will imply that the disclosures around that segment are required to be given in the financial statements. So the first step, or the first criteria, that was about percentage of the total revenue of the segment as compared to total revenue of all the segments. Second criteria, percentage of segment assets as compared to total segments or total assets of all the segments taken together. And third was about this quantitative assessment by looking at the results of the segment. If any of these criteria give us a segment, or if any of the segment fulfills any of this criteria, then such a segment will become reportable segment. But even after that, we need to check a minimum quantitative threshold, and that was 75% of the total revenue of the enterprise. That all the reportable segments taken together should touch up to at least 75%. If that is not the case, then we need to add more. We need to add more segments so that the reporting revenue, or the revenue in respect of the reportable segments, becomes at least 75% of the total enterprise revenue. So now these are the steps basis which we will reach up to the stage of reportable segments. Now, moving further on this, in relation to the reportable segments, there is another assessment that is required to be done, and that is about primary and secondary segments. Primary and secondary. So this standard says that out of the business segments which are categorized into business segments or the geographical segments, we need to identify which segment will become primary and which segment will become secondary. So let's understand this part now. As we discussed, there are two types of segments. Segments can be the business segment, or the other one could be geographical segments. Okay. Now, as around these two segments, we need to assess out of these two segments which one we want to call as primary, and the which one which will become other than primary, which is also called as secondary segment. Now, why do we do this assessment? This is because the disclosure requirements for primary business segment or the primary geographical segment, or you can say the primary segment are more. So this means we now need to check which segment will become primary and which will become secondary. Disclosures are required to be given for both, but the disclosures for the primary segment are more as compared to the secondary segment. Secondly, it is not necessary that business segment will become primary or the geographical segment will become primary. This is something we need to assess, and this is something which is assessed by the management, for which again the guidance is available by the standard. So let's look at the guidance which the standard provides. You can all move on to page number 1.54. The dominant source and the nature of risks and returns of an entity should govern whether its primary segment reporting will be business or the geographical. So now there are few factors which we need to consider for the purposes of assessment of whether a segment will become primary or secondary. So what are those factors? First, what's the dominant source? Dominant source, nature of risks and returns. Basis which we will assess a segment as primary or secondary. Let's try to understand this point. Say there's a business or there's a company which is dealing into two products, product A and product B. And the company is selling these two products in India as well as outside India. Okay. Now, the way management looks at its business, the way management identifies the requirements related to its customers, its distribution methods, the way the management would like to review its performance, let's suppose, is driven by the nature of the product. It means the management is always wanting to assess the performance on the basis of these two products, product A and product B. And the management doesn't really get into the assessment or doesn't want to get into the assessment of its business in India or outside India. So that means what's the dominant factor for the management to assess its performance? In this case, the dominant factor for the management to assess its performance is the nature of the businesses which it has. And the nature of businesses means two types of products into which it is dealing. It's not about geographies into which the management is dealing, because that's not really the prime focus of the management. That is a secondary factor. Of course, management would want to review that part as well, but that will become secondary to the management. The first thing which the management will always want to do will be to look at the nature of the business, will be to look at the performance of the products which the management is having, and not the performance in the regions or in the market. Yeah, clear? So in this case, when we look at the performance of the business, when we look at the factor which is dominant in this business, what do you see? We see that business segment appears to be more dominant as compared to geographical segment, if we were to assess the performance of the company. Similarly, if we look at the nature of risks and returns, then the nature of risk and returns, which are analyzed by the management, which are assessed by the management, are more towards the business segment, are more dominated by the nature of the products and not really by the locations or the markets into which those products are sold. Why? Because geographies are not impacting the product significantly, or geographies are not impacting the business significantly. It's the products which are impacting the business significantly. Okay. In such a case, when you get into such type of situation, what will you do? In such a situation, you will choose business segment as the primary segment, wherein geographical segment will automatically become the secondary segment. Clear? Yeah. It is not possible that we have business as well as geographical segment as the primary. Yeah, because if something is primary, the other one will definitely become the secondary. And it is not necessary, as I told you, that it's business which has to become primary. For example, if we talk about an entity which is mainly focused towards development of its business, say in US. So what's the focus of the entity? Focus of the entity is the geography. Be it any product, the focus is completely on the geography. The way the management would want to analyze its performance will be on the basis of the geography and not really on the basis of the product. Because within that geography, the company may be dealing into various products. And outside that geography, the company again may be dealing into various products. So again, if we'll see what is it that gets impacted, the source, the risk and returns. And every time what do we need to see? What's the most dominant factor which the management is really looking at? So you can also say that this is also one of the perspectives which you need to look at from the management's point of view. So that's why whenever this segment assessment is required to be done, a lot of discussions, a lot of inquiries are required to be made with the management. But only then it is something which becomes possible. So it is not something which other person can independently do, because there is something which reflects the perspective of the management. Okay, clear? Now, there are few points which are required to be considered for the purposes of assessment as we discussed. So let's look at those points also. If one or more of the segments reported internally to the directors and the management is a business segment or a geographical segment based on the factors in the definitions, but others are not, then the paragraph below should be applied only to those internal segments that do not meet the definitions. That is, an internally reported segment that meets the definition should not be further segmented. So let's see that again. For those segments reported internally to the directors and the management that do not satisfy the definitions, management of the enterprise should look to next lower level of internal segmentation that reports the information along the product and the service lines or the geographical lines. And if such an internally reported lower level segment meets the definition of business segment or geographical segment, the criteria for identifying a reportable segment should be applied to that segment. Okay. So now what is it that we are trying to cover over here? Let's understand. Now, I'll change the flow a bit, which we discussed. In the last session, and something which we also discussed today morning, when we just started off, was about the flow. So what was the flow? First step was to get to the segment, and which can be many, as we discussed. Second step was to bifurcate them into business and geographical segments. Correct? The third step that we discussed was reportable segments. Means out of these segments as a whole, which all will become reportable. Correct? Now what I'm just trying to add over here is the assessment of primary and secondary segment. Now this is important. Why? Because whenever we look into our assessment, what do we need to check? We need to check that out of the business segments, out of the geographical segments, which all segments are reportable. But for the purposes of reporting, as we discussed, what is required? Assessment of primary and secondary. Why? Because for primary segment, disclosures are more, for secondary segment, disclosures are less. So that's why what you can say is, after these two, after we get on to this point, there are two things which are required to be done. First, their bifurcation into primary and secondary. As I told you, only business segment can become primary, only geographical segment can become secondary, or only geographical segment can become primary and only business segment can become secondary. Yeah. So that means you cannot mix and match. Number two, reportable segments are also required to be identified. So by reportable segments, we mean to say that out of the total segments which the business will have, we need to identify which out of those are going to be reported. Okay. Number three is to check that quantitative threshold of 75%. So for this, what I'll say is reportable segments on the basis of 10% threshold. Then again, reportable segment on the basis of 75% threshold. Okay. Yeah. So this will help us to understand the flow of various disclosures and the assessment of various segments in respect of this standard. Now, what we will do is we will move on to those disclosures which are required to be given for the primary segment and for the secondary segment. Now we will not talk about business segment or the geographical segment. No. Why? Because for the purposes of our disclosures, what do we know? We know there are two types of segments. One is primary, second is secondary. Okay. So every time when we will talk about disclosures, we will be talking about disclosures related to primary, disclosures related to secondary. So we will not be talking about disclosures related to business segment, disclosures related to geographical segment. No, that is not how you will check the requirements related to disclosures. Okay, so in a way you can also say that the segments can be broken into two categories, primary and secondary. And for this primary, you can have either business or geographical, And for the secondary, again, you can have either business or geographical. So whichever way you want to put it down, you can put it down. Clear? Clear on this? So now, moving on to disclosure requirements. So there are many disclosures which are required for primary. So let's move on to these disclosures on the study material, page number 1.57. Primary reporting format. An enterprise shall disclose the following for each reportable segment. For the reporting segments that we have, and under the primary segments. So that means something which is primary. So let's suppose this is now primary. This is primary, and let's suppose this is secondary. Now for this primary segment, in respect of the reportable segments, what is required to be disclosed? 1. Segment revenue classified into segment revenue from sales to external customers and segment revenue from transactions with other segments. So that means external sales, sales outside the entity made by that particular segment, and segment disclosure in respect of the internal sales, means the sales which that particular segment would have done to other segments within time. So that's why internal as well as external sales both are required to be disclosed. And again, you may be thinking that, sir, in the financial statements, in the P&L, we are reporting only the external revenue. So will it not lead to any confusion when we are also reporting the internal revenue in the financial statements? The answer is no, because we are clarifying over there. We will write that this is the external revenue, this is the internal revenue, and eventually we will also ensure that all of these numbers tie to the statement of P&L, and we'll discuss how. Okay, so this is the first disclosure. Second is segment result. What do you mean by result? Result means the profit or the losses. Yeah. Third, total carrying amount of segment assets, total amount of segment liabilities. So segment assets are required to be disclosed, segment liabilities are required to be disclosed, segment revenue is required to be disclosed, segment results are required to be disclosed. And you will be thinking, sir, in a way, it would mean preparing a separate financial statement or separate balance sheet and P&L for the segment. The answer is yes. In a way, you will require that complete information of the financial statement bifurcated into various segments. So you can say company will have to bifurcate its financial statements into various segments. Okay. Next disclosure. Total cost incurred during the period to acquire segment assets that are expected to be used during more than one period. So what does it mean? It means acquisition of PPE and acquisition of intangible assets during the year. Those are also required to be disclosed. And acquisition means within that segment or for that segment, whatever acquisitions would have been done, that is required to be disclosed. Total amount of expense included in the segment result for depreciation and amortization in respect of segment assets. So now once you put down the assets number, means PP or the intangible assets, you will also be required to show the depreciation or the amortization of that, because its depreciation or amortization would have gone to that particular segment only. Correct? Next, total amount of significant non-cash expenses other than depreciation and amortization are also required to be disclosed. Okay. Clear? An entity that reports amount of cash flows arising from operating, investing, and financing activities of a segment need not disclose depreciation, amortization, or any other non-cash expense. Fine. This is because of the fact that such disclosure has already been reported in the cash flows. Yeah. An entity should present reconciliation between information disclosed for reportable segments and the aggregated information in the enterprise financial statements. So this is very, very important. Okay, so let's understand what do you mean by this and how this is required to be covered. Just give me a minute. Just 1 minute. So say we have a balance sheet wherein certain numbers are reported. We have P&L wherein numbers are reported. All of these numbers which you report in the P&L belong to external customers or the external parties. There is nothing which is related to within the company. Yeah, because the numbers which are in respect of internal revenues, internal costs, etc., they get knocked off. Okay, and then comes the segment disclosure. All these things, or all three, which we have written over the board, are forming part of one set of financial statements. Okay. So that's why, what does the standard require? Standard says any information that you disclose over here, yeah, should be reconciled to the balance sheet as per the P&L. What does it mean? Means, if let's suppose you are disclosing revenue over here, okay, and revenue, let's suppose you are saying internal, external. Say internal you are saying is 10, external is 90. So all in all 100 is the revenue which you have disclosed. Correct. Now this revenue which you are disclosing in the segment disclosure should tie to the number which is disclosed in the P&L. Because in the P&L you would have given the revenue. The revenue would have been reported. Correct. So now when the revenue which is reported in the P&L, let's suppose if that is 90, so you need to ensure that 90 is the number which is also getting disclosed in the disclosure. There should not be any mismatch. If there's a mismatch, what would happen? It would confuse the readers. Any user of the financial statement will get confused with that. Yes or no? Yeah. Similarly, when you look at the results, here again, some number will be reported. Now, this number should tie to the one which is reported in the P&L, because eventually the profit or the loss of the entity has to remain same. It cannot be any different. It may be different for various segments, but for various segments taken together, it has to match. Yeah, and you will be thinking, but sir, why is this reconciliation required? This is because that when you give this disclosure, you may have various segments. Let's suppose we have 3 segments. A, B, C, and let's suppose you're C code. So this is 2, and let's suppose this is 7. So this is 4. Let's suppose this is 10. Say this is 4. This makes it 10. And let's suppose this is 10. This is 9. Okay. So now, when we say reconciliation, so the reconciliation doesn't mean that we need to reconcile A, B, C, because this is not getting reported in P&L. So this reconciliation has to be in respect of total number which you disclose. So this has to be reconciled. This one. Clear? Clear on this part? Yeah. Similarly, segment assets should be reconciled to company's assets. Segment liabilities should be reconciled to company's liabilities. So all of these numbers should not really have any mismatch. Understood? Yeah. Now moving on to the disclosures which are required for secondary segment. Now for a secondary segment, the disclosures will vary, and this can again be a bit confusing for all of you. Okay, so that's why what we can do is I can just put it down on the board. So we discussed about primary and secondary. Yeah. So now, in this case, the standard says if the primary reporting segment is the business segment. Let's suppose business segment became primary. Situation number 1. Then the geographical segment will become secondary. Now for the primary segment, we have already discussed what all disclosures are required to be given. But the disclosures which are required to be given for secondary will vary depending on the fact whether business is the primary segment or geographical is the primary segment. So the first situation that we are discussing is wherein business segment was the primary segment and geographical segment becomes secondary segment. So in this case, for this geographical segment, which is a secondary segment, let's understand what are the disclosures required. Segment revenue from the external customers by geographical area based on the geographical locations of its customers for each geographical segment whose revenue from sales to customers or to external customers is 10% or more of the enterprise revenue. Now in this case, you may be thinking, sir, why are we applying this criteria of 10%? Again, have we not really identified the reportable segments? If that is already done, then why we are again checking that disclose this number for geographical segment whose revenue from sales to external customers is 10% or more of the external enterprise revenue? You may be thinking, sir, this criteria would have already been met because that's why we would have considered the segment as reportable. Now, in this case, there are a few things which you need to remember. First, when we identify reportable segments, for which category of segment we did that? From the primary one. For the primary one, we selected the reportable segments out of all the segments. For the geographical segment, we didn't apply that criteria. For the geographical segment, we will use this criteria. Because for the geographical segment, disclosures are not required to be given for every reportable segment. No. Only limited disclosures are required. And that's why you will apply this limited criteria for the assessment of those segments for which secondary disclosures will be given. Clear? Yeah, I can understand this can become quite confusing. So that's why it's very, very important for you to follow that flow chart which I shared with you. Yeah, and also this chart which we will be now completing with once we are done. Next, total carrying amount of segment assets on the basis of geographical location of the assets. For each geographical segment whose assets are 10% or more of the total assets of all the geographical segments and total cost incurred during the period to acquire segment assets that are expected to be used. That means acquisition of PPE and intangible assets for each geographical segment whose segment assets are 10% or more of the total assets of the geographical segments. Okay, so now for this we can say disclosure in relation to revenue, disclosure in relation to results, disclosure in relation to revenue, disclosure in relation to the segment assets, and disclosure in relation to acquisition of PPE. Acquisition of PPE or intangible assets. This is required to be given, but this is required to be given based on the criteria. Okay, this is based on some criteria, and this criteria is not the one which we use for reportable segments. Yeah. Number two, if the primary segment is geographical segment. So let's suppose if we are into a different situation. Let's suppose geographical segment becomes the primary segment. Geographical segment, let's suppose, becomes the primary segment. In that case, business segment will become the secondary segment. And for this secondary segment, or for this secondary business segment, some limited disclosures will be required to be given. Yes or no? Some limited disclosures will be required to be given. Now, what are those limited disclosures? Let's understand. It says, report the following segment information for each business segment whose revenue from sales to external customers is 10% or more of the revenue of the enterprise, or whose segment assets are 10% or more of the total assets of all the segments. Now, please remember that the criteria that we are checking over here is not based on each and every item. So that's why what I will say is this is based on criteria. I'm marking it over here. Why? Because in this case, you will check the criteria for each and every disclosure. But when it comes to business segment, which has become secondary, you will check the criteria not for every line item which is required to be disclosed, but for the business segments to be selected first, and for all those business segments which have been selected, what is required to be disclosed? Segment revenue from the external customers, segment assets, and the total cost spent to acquire the PPEs. You can say acquisition of PPE. Okay. Other than this means other than the disclosure in relation to primary and the secondary, whichever case it may be, there can only be two situations. Some more disclosures are required to be given. Let's understand that. In measuring and reporting segment revenue from transactions, so you can move on to this second page. I'm just hoping that you are all following me. Yeah, you're all there, because we haven't really discussed the questions today. So I'm just hoping you're all around, because very soon we are going to get on to the questions. So you're all ready? Yeah? Quickly, please confirm you're all there, you're all ready? Yes, I'm waiting for your response. Quickly, you're all there? Very soon we'll get on to the questions. Huh? Please confirm you're all there. Okay, great. PA is saying yes. Very good. And you've been able to understand all of these concepts. Yeah, bit difficult to digest all of them. So that's why when we'll be doing the questions, you will start getting more and more clarity around these concepts. But I'm hoping that you're following me. Okay, Jamil is saying yes. Just a little bit, but no problem, absolutely fine. Okay, great. Anushka, Kushi, they are all there. Yeah. Matish is saying yes, we are ready. Okay, great. So we'll get on to the questions, huh? And you will have to solve that. And in terms of solution, you will not get into the computations. It's about the disclosures which you will be required to give. Okay. So some more time and then we move on to the disclosures. So I was talking about this other disclosure. Means other than these two. In measuring and reporting segment revenue from transactions with other segments, inter-segment transfers should be measured on the basis that the enterprise actually used to price those transfers. And the basis of inter-segment transfers and any change therein should also be disclosed. Now in this case, standard says that when the segment would have sold something to other segment, so we are talking about inter-segment transfer, means in terms of transactions which have taken place internally within the company. Some pricing mechanism would have been used by the company, because for the external customers we can understand, but for the internal transactions, some pricing mechanism should have been used by the company, depending on the policies, procedures which the company follows. Those pricing mechanisms are required to be disclosed. Why? Because we are reporting the information related to internal transfers, etc. So that's why those internal transfer pricing mechanism is important for the users of the financial statements. Yeah, clear? If there are any changes in the accounting policies adopted for segment reporting that have a material effect on the segment information, that should also be disclosed. Such disclosure include description of the nature of change, financial effect. It's the same thing. Huh? So something which you will be requiring to disclose about a change in accounting policy, if by chance that happens in case of a segment, that is required to be disclosed appropriately. Fine. So now, before I get on to the illustrations, some understanding about few terms which though we have used multiple times, but you may have some questions around it. We can have a discussion on that part and then we'll move on to the questions. And I'll clarify what are those terms that I'm referring to over here. At various places, we have talked about segment revenue, segment assets, segment liabilities, segment results. Yes or no? At various places, we have talked about it. Now, what does this segment revenue comprise of? What does this segment result comprise of? This is defined by the standard. So what we can do is we can have a quick understanding of all of these terms one by one. Because one thing you'll have to remember that even though we are going to now discuss all of these terms, but you will not be able to just learn it. So don't just try to mug up all of these terms that we are going to discuss. The more and more practice you'll do, basis the questions you'll have, automatically you'll start getting the clarity of all of these terms. Means within the segment expenses, which all items should be included and which all should not be included. That is something you'll get to know once you practice the questions. Fine. But anyways, for the purpose of our understanding, we'll just flip through all of these parts. First is the segment revenue. Segment revenue. Segment revenue is the aggregate of portion of enterprise revenue that is attributable to a segment. Means within a company, as we discussed, if 90 is the sales, what is the sale for segment A, segment B, segment C? The relevant portion of enterprise revenue that can be allocated on a reasonable basis to a particular segment. Third, revenue from transactions with other segments. So quickly, if you can just write it in simple terms, this will comprise of external revenues and internal revenues. Okay. Segment revenue does not include extraordinary items. Let's suppose if there has been any extraordinary income during the year, which we discussed in AS5, that will not come under segment revenue. Okay. Interest or dividend income, including the interest which may be earned by the company on advances or loans to other segments, unless the operations of the segment are primarily of financial nature. Means companies like NBFCs. So interest or dividend income should also not be disclosed. Gains on sale of investments or on extinguishment of debt, if any, that should also not be disclosed unless the company is into financial business, something like banks, NBFCs, etc. Okay. So these three are the exclusions. So what are the exclusions? Extraordinary item. This is excluded. Interest or dividend income. This is also excluded. Gain on sale of investment. This is also excluded. Gain on extinguishment of debt. This is also excluded. So these are all excluded. Correct? Yeah? Fine. Moving further. Segment expense. What does it include? Once again, you will say segment expense will include any external expenses incurred by that particular segment and the expenses related to transactions with other segments. So that means internal as well as external. Here again, some of the items which are excluded. Extraordinary item. So let's suppose if there is extraordinary expense. Instead of interest income, now we are talking about interest expense. So that should also be excluded. Interest expense is excluded. Loss on sale of investment, loss on extinguishment of debt. So instead of gain, now this will become loss. This will become loss. This will not get covered. Next, income tax expense. Income tax expense will also not be forming part of this. This will also not come here. General administrative expenses, head office expenses, other expenses that arise at the company level and relate to company as a whole. However, costs are sometimes incurred at the enterprise level on behalf of the segment. Such costs are part of a segment expense if they relate to the operating activities of the segment and if they can be directly attributed or allocated to the segment on a reasonable basis. So let's see, what do you mean by this? Say for example, salary of chief accountant. Okay. And in case of a business, the company is having two primary business segments. The company is into manufacturing and it has got two plants, plant A and plant B. Yeah. Both of them will also have their own accounting team. So they have their segregated expenditure in relation to accounting. The role of chief accountant is to look at the consolidation. Consolidation means these two units at a consolidated level. So now in this case, standard says that if an expenditure has been incurred which belongs to company as a whole and not really to a particular segment. and which can also not be allocated. So if there is any way, yeah, if there is any way through which this expense can be allocated to these two segments, and that is a reasonable basis. Why? Because this expense is something which relates to the activities of this particular segment. Then such allocation can be done. Otherwise, such type of expenses which do not really belong to the segment but to the company as a whole are not disclosed in the segment expenses. In fact, if you look at the financial statements of any company, you will say that in the disclosures related to segment, generally there is an item which is called as others, or the one which is related to corporate. What does it indicate? Means this is the portion which does not really belong to a segment. Something like this is. So whenever you give the disclosure, say we have got following segments A, B, C, D. Yeah, but still, let's suppose there's some part which has not really gone into all of them, but at a company level, it's coming. So where do you take it? Others. Others means which doesn't belong to the segment. Others doesn't mean it indicates all other segments which are not reported. Those will come over here. But others also mean some part of these segments or some part of the company as a whole, which is not allocable to any of these segments. And then comes the total. This others is also at times called as unallocated or corporate. Yeah, sometimes you see these names. Okay, Manish has a query. Manish is asking, sir, if the plant of a segment gets destroyed with fire, even then this will not form part of the segment? Yes, so that will be an extraordinary. Nakul is asking, what is extinguishment of debt? Extinguishment of debt means you've taken a loan from the bank for say 50 lakhs, out of which 5 lakh was repaid, and now you have renegotiated the loan with the bank. So the balance was 45, and bank has allowed you not to pay 5 lakh. So the loan to the extent of 5 lakh is extinguished by the bank. So now your outstanding balance is only 40 lakhs. This arises in case of restructuring of loan. Okay. Aditya is asking, sir, other income is a vast head which sometimes has interest income, and there are so many other incomes like sales receipts, sale of waste, extra material. Shall we exclude all other incomes? No. We will not be excluding all other income. In fact, we have not really talked about exclusion of other income. We have only talked about exclusion of specific incomes or expenses. That's the only thing which you need to exclude, not all. Okay. Number 3, segment result. Segment result will be very simple for you. What is going to be segment result? Segment revenue less segment expenses. That becomes segment result. Okay. Number 4, segment assets. So we have now page 1.53. We are following the statement. Segment assets. Segment assets means the operating assets belonging to that particular segment, means which are operational in that particular segment or operationally required for that particular segment. I'm just trying to keep it very, very simple for the purpose of our understanding, and it excludes income tax assets. Now, what can be the income tax asset? It's the advance tax which has been paid. Deferred tax asset belonging to that particular segment. Or the assets which are used for general company or head office. So if there is any asset which is used for company as a whole, which is not really required for, say, that particular segment, that will not come over. Okay. PP, you can say, will be specific to the segment. Yeah, PP is something just specific to the segment. But if you talk about, say, an advance, and an advance which is relation to, say, income tax. So this advance for the income tax, can we really say that it really belongs to that particular segment? No. Because there is something which you will compute, which you will always assess at the company level and not at the segment level. So that's why we will exclude this. Next is about the segment liabilities. So the same principle will apply. Operating liabilities means the one which are really belonging to that segment, and it excludes income tax liabilities. These are from the company as a whole. Borrowings and other liabilities that are incurred for financing and not for operating purposes. Why? Because if that is for financing, then this will be something which will be relevant at the company level and not at the operational level. Yeah. Okay. Moving further on to the treatment of interest for determining segment expense. So let's see, how do you treat this interest expense, which may be related to the overdrafts or the other operating liabilities? Interest expense relating to overdrafts, other operating liabilities, if any. Okay. So you may be thinking, sir, how can interest arise on other operating liabilities? Depends on the terms. Identified to a particular segment should not be included as part of segment expense unless operations of the segment are primarily of a financial nature or unless interest is included as part of cost of inventories. Okay. Next is about the allocation. Now this, I would say, is the most important part of the standard. Allocation. What do I mean by allocation, and why am I calling this as the most important part of the standard? There are a few reasons around it. Let's try to understand. See, there is a company, which, let's suppose, is dealing into various products. Products. Say product category can be A, B, and C. So broadly, we are saying there are three categories of products. Yeah. Broadly, we can say there are three categories of products. In such a case, for this company, we need to identify a few things. Segment revenue, segment expenses, results, assets, liabilities. Okay. Say for example, company has got only one office. They've got only one office. In this case, and let's just try to think about it practically. Company will be easily able to identify the revenues of various products, expenses in relation to various products. Why? Because they will be knowing what all items have been purchased for this, what all items have been spent for this. But let's talk about salary. Because people are common within this company and they are working on 3 products. So what is the first step the business will have to do? Company will have to segregate its employees basis the businesses which they have been handling. Yeah. So the sales team and the purchase team will be easily identifiable on the basis of 3 types of businesses. But HR team, admin team, accounts team, treasury team, there are so many teams which are working for company as a whole, which are not really working for product A, B or C. Now, what do you do about those salaries or those costs? Similarly, if you look at the assets of the company, we talk about furniture in future, if you talk about one building which is there, if you talk about electrical fittings, if you talk about vehicles of the company, all of these are common to company as a whole. Now the question arises, how do we really allocate such type of assets, liabilities, expenses to all of these segments? For this, an allocation method is practically used by the companies. Otherwise, it will not be possible for them to give this disclosure. Because no company will have clearly identified each and every item of its chart of accounts for the purposes of this segment disclosure. Some mechanism they will have to choose for the purposes of bifurcating their costs, assets, liabilities, etc., which is called as allocation amongst various segments. Okay, let's see how is this done. An enterprise looks to its internal financial reporting system for identifying those items that can be directly attributable or reasonably attributable. So one is their internal reporting system which they would have prepared. Is it such that the information is clearly bifurcated into these 3 categories? Yeah. Means there is a clear identification. So this can be the first case. However, in some cases, revenue, expense, asset or liability may have been allocated to segments on a basis that is understood by the management and that could be deemed arbitrary in perception of external users. Sometimes an entity may choose not to allocate some of the items, even though a reasonable basis for doing the allocation exists with the company. Okay. Yeah. Now, while the accounting policies which are used in preparing and presenting the financial statements of an enterprise are the fundamental segment accounting policies. Segment accounting policies including policies that relate specifically to segment reporting, identification of segments, method of pricing, intersegment transfers, basis for allocating revenue and basis of allocating expenses. Clearly, if you look at this guidance, what does it say? That when it comes to the allocation, management judgment is required to be followed. Why? Because the management has the best understanding of their business. They know everything about their assets, liabilities, incomes, or expenses. And that's why they will be in the best position to allocate them if those are not specifically identified one-on-one. Correct? Now, in such a case, because they are the best one to assess it, so that's why they will also apply some judgment. And on the basis of their judgment, they will do the allocation. Say, for example, if there is a rent expense, how will they allocate? Maybe on the basis of the area. On the basis of the area towards the staff which is occupying the space in the office. So this can be one of the basis. And you have a question on this. Some of you will definitely have a question on this. So why is this basis followed? Why not some other basis followed? Now all of these bases which are used for allocation should be by the best assessment by the management. We are not saying this can be arbitrary, which doesn't have any basis and which can be done on an ad hoc basis by the management. No, management will definitely have some basis for it. But some basis which the management may have used may not really be liked or may not really be considered as appropriate by us. But we don't really have any choice because the standard doesn't give you any rule or the method for allocation. This has to be on the basis of the judgment of the management. Clear? Clear? All of you? Now, before I move further, and when I say I move further, I will be moving on to the examples to discuss this. Let us quickly try to understand if you have any questions, any queries. Quickly, if you have any questions, any doubts, please let me know. Yes, quickly. Any questions, any doubts? If you have, please let me know. Sakshi is clear on this, Manish is clear, fine. Okay, so now let's move on to illustration number 5. All of you need to answer this and please don't look at the solution because if you try to answer it, this may go wrong, doesn't matter, but that will only help you to understand the concept in a better manner. Okay. Microtech Limited produces batteries for scooters. So it produces batteries for scooters, cars, trucks, and specialized batteries for inverters and UPS. For inverters, UPS. Fine. How many segments should it have and why? Over to you. I think we have spent so much time on this assessment only, so that's why I want all of you to answer this with the best understanding around the concept which you would have gained. Don't think it may go wrong and that's why you need to read the solution. Just try to be honest, answer this and give me the basis. So I'm now waiting for responses. Yes, quickly. Start sharing your response. Sana, I will come to your query. Sanjay is saying batteries seem to be the only business segment to me because the nature is only one. So Sanjay is saying there are no segments over here, sir. It's only one. Batteries, only one business segment. Okay. What about others? Great, I can see your responses. Manish is saying 3 segments. Kamal is saying 2 segments as there is only, there are 2 products, batteries, specialized batteries, and which are differing in nature. But if you look at the batteries for scooters, cars, and trucks, they can be clubbed as well. So Kamal is saying 2 categories. Okay, fine. Akshay is saying 2 segments. Priya is saying 2 batteries, one normal one, the other one is specialized. Kushi is saying 3. One for scooter, cars and trucks, second for inverters, third for UPS. Okay, great. Rangajula is saying 2 segments. This one and the other one. Okay. Shabir is saying it should have 2 segments, again the same basis. One for automobile, second for specialized one. Chana is saying 2 segments, battery and specialized batteries. See, nobody is giving me the rationale, the reason for this, which is very important for them. Ramakrishna is saying batteries and special batteries. Trishya is saying 2 segments. So you can see 2 or 3 is fine, but let me just see who can give me the reason why you are doing this. I can see only one response was there from Kamal as around the reason. Manish and Sakshi was given the response, but the reason is missing. So I'm waiting for the reasoning, the basis of your assessment. That seems to be the missing factor. Nakul has also answered, Jamil has also answered this. Okay, Anushka is saying, so there are 2 segments, battery specialized, and it can be classified in accordance with car or scooter, which is fine. But the basis of your assessment, what's that? Please remember in the exam, in relation to the questions related to accounting standards, your basis of assessment has to be given up. That is very, very important. You just can't get the solution without the basis. That's a must. Otherwise, how did you assess it? Will not be known. Okay, Namrata is again saying 2. Rangajula is giving the basis. She's saying why 2 segments is the battery same, but usage is different for scooters and for inverters. Usage is different. All right, which is good. So this is definitely, you can say, one of the bases. Chana is saying because the risk and rewards are different. Sir. Sakshi is saying risk and rewards are different. Nishya is saying differs on the basis of the risks. Okay, great. So let's go to the solution now. In case of this company, the basic product is battery, no doubt. But the risks and returns of the batteries, which are into broadly two categories. One for scooter, cars, trucks, means for the automobile sector. And the other sector means other than automobile sector, which is going for UPS or the inverters, is different. And let's see why is this different. In case of automobile batteries, risks and returns are affected by because of the government policies, conditions of the road, quality of the automobile, of course, yes. Whereas in case of batteries for inverter and UPS, it's not the quality of the automobile which will matter. It's not the road condition which will have an impact, but it's about the power condition, standard of living, which will have an impact. Okay? So that's why we can say there are two segments. This is segment A and this is segment B. Okay. Now, another question for you. Continuing on the same example, you are saying there are two segments, A and B. In fact, most of you answered this saying there are two. Okay. Now, which type of segments these will become? Can you tell me under which category of segments you will take it? I think this is very easy for you to answer. Under which category of segments you will take it? Quickly. I'm waiting for a response. Under which category of segments you will take it? Quickly, waiting for a response. Under which category of segments you will take it? Yes, Gypsy, who will answer this? Very good. Kamal is saying this will go under business segments. Yes, because the segments which you have identified is not on the basis of geography. It's on the basis of the businesses, or it's on the basis of the products which the companies sell. So that's why the category of the segment which we have selected over here is business segment. Now, can you also tell me? Yeah. My next question to all of you. Can you also tell me, I think Manish has answered this, but this was my question to all of you. Let's see who can answer this one. In this particular example, will you be able to identify primary and secondary business, primary and secondary segments? In this example, will you be able to identify primary and secondary? If yes, which one will be primary and which one will be secondary? Quickly. Anish is saying primary because business in nature. I did understand your point. Let me just see responses from others. For this, will you be able to do that? Yes. Yeah. Quickly. Sanjay is saying, no, sir. In this case, we will not be able to identify primary and secondary. Why? This is because all these segments or both these segments are what? Business only. That's correct. Yes or no? Though some of you have tried to bifurcate it, but please remember, how did we do that? On the basis of business and geography. Within a business, you will not say this is primary, this is secondary. Fine. Clear? Shrisha, I'm hoping you're clear, huh? Jameel, you're clear? Okay. Great. So now we can move on to another example. Illustration number 2. Yeah. Illustration number 2 on page 1.60. So I just read this illustration. You need to answer this, and we'll also take a break now. Yeah, but let's understand this illustration. A company has an inter-segment transfer pricing policy of charging at cost less 10%, whereas the market prices are generally 25% above cost. Is the policy adopted by the company correct? So now you need to think about it, and we will come over to this point after the break. Yeah. In the meantime, if you just want to spend time on this, it's fine. If you will know, sir, let's take a break. No problem. So you can also take a break. After the break, we will discuss this. Okay. Yeah. Hi, welcome back. So we'll now move on to this illustration number 2. Let's put down the facts now. Intersegment transfer policy. For intersegment, company selling at cost less 10%. And for the external, it is cost plus 25%. Correct? Yeah. Let me just see what have been your responses on this. Rama is saying it's not correct. Anushka is saying it's correct because the intersegment should be measured on the basis that the enterprise actually used price. And it is in the hands of company whether it should be based on the cost or below cost. Manish is saying seems to be correct, but the enterprise should present the reconciliation between segment and enterprise result and disclose in the segment report. Kushi is saying AS do not specify any specific policy to be used for inter-segment transfer price. Drishya is saying policy adopted is correct. Whichever policy is adopted, it should be disclosed. Akshay is saying generally entity charges on cost price or below market price because inter-segment is also related. Therefore, they are not charging profit portion, and these are management decisions only. Therefore, in the question, policy adopted by the company is correct. Sakshi is saying entity can have its own policy for pricing inter-segment transfer, which may be below cost or on cost, but it has to be disclosed and applied consistently. Therefore, it seems to be correct. Now, as you rightly mentioned, an entity can have its own policy for pricing the inter-segment transfers, and hence inter-segment transfers may be at cost, below cost, or maybe at some markup of the cost. Therefore, in the given case, we cannot say that why is it getting sold below cost as against the above cost margins they have been charging to the external customers. This is something which is about the management decision. This is something which is internal to the company. Okay, so that's why we can't really question this. Fine. Okay. Moving on to the next example. Page number 1.61, illustration number 4. Now this one again needs to be solved by. You are required to give a disclosure for segment for publication in Diversifiers Limited from the following details of the company's 3 divisions: forging shop division, sales to Breitbart division, other domestic sales division, export sales. Then we have Breitbart division, sales to fitting division, export sales to Rwanda, then fitting division, export sales to Maldives. They also have some information related to head office. Yeah, so there are 3 divisions of forging, Breitbart, fitting, and the 4th one is head office. Head office is also about the corporate. Okay. Information about sales, then pre-tax operating results, head office reallocation, etc. have been given to us. PPE, net current assets, long-term liabilities etc. have been given to us. So now, can you just start plotting the disclosure with this information? And definitely, you won't be able to share your response as around this, but still, you should just try to practice this. What you can just share with me is the segment revenue, or the segment result, or the segment assets which you would have allocated. Fine. So this is how you can just start on this part. Okay. Quickly. Yes. I'll wait for a couple of minutes and then I'll also start this solution. Fine. Yeah, you have started. You're just trying to put this disclosure. All of you, please confirm. Have you started this? First thing which you need to look into this will be about the primary and secondary. Yes or no? Primary and secondary. I think some of you answered about the previous one, Ranjira, Sana, the great. For this disclosure, you've all started. Yes or no? Please confirm quickly. You've all started. Yeah, started. Very good. Okay, so now I'll also start. Yeah, I'm hoping that you will be somewhere in the middle of this, so you can just continue. Huh? So some of you who have not been able to think about as to how the disclosure will be given, how do we really start, they can follow me. Otherwise, if you have started on your own, just try to wrap it up. Wherever you will get stuck, you can just start following me from that place. Okay. Yeah. So now the question requires you to give the disclosure. So first of all, we'll give the disclosure about the primary segment on the basis of the information which is available. Clearly, we can say that the way management is looking at the information, the dominant factor seems to be the business divisions. So that's why what will become the primary segment? Business segment. Yeah. Okay. Now, for the business segment, we understand what all disclosures are required to be given. So let's put down all of those segments. Similar, we'll have a particulars over here. Then we have forging shop division. Forging shop. Then we have bright bar division, fitting. Bright bar, fitting. Then we also need total and then and something which will remain unallocated. We'll have to analyze that. And if there are any transactions between the segments, means the internal one, those will require elimination. So we'll need some space for adjustments. You can see adjustments. Yeah. Let's move this bit over here. Space. Yeah. So the first information is about the segment revenue. Manish is saying all the divisions are reportable segments on the basis of assets. So she is saying that I am now following because I am a little bit confused as around the disclosures and what terms to use. That's fine. So let's start with the segment revenue. Do we have this information available in the question? The answer is yes. So first, we will give the sales which are external. And external sales again are domestic as well as export given in the question. Sales are domestic as well as export. So for forging shop, we can say forging shop has got domestic sale of 90, export sale of 6135. 9061. Correct. So its total external sales. Becomes 6225. Yeah. Then we need to look at any sales which would have taken place internally. So this has also got some internal sales. Inter-segment sales, which is 4575. So the total revenue for this segment will become 10,800. Yeah, we will also plot this information for other divisions. For other divisions, we see that there is no domestic sale. So domestic sale is nil. For other divisions. Export sales for bright bar is 300. So that's why this will become. For fitting division, it's 270. So this will become 270. Okay. Then we have inter-segment sales of 45 in case of bright bar. And nil over here. Nil over here. Yeah. So the total sales for these two we get as 45 in 2. Correct. Now we can also move on to the total part over here after considering the eliminations, etc. So over here, there will not be any elimination. Over here, what's the total? 6705. So total for these two will be 6795. 6795. Then the eliminations over here are these two 4620. 4620, because of which nothing will go over here. 4620, and this becomes 679. 67. Correct. Yeah, correct. Now moving further, the next disclosure will be about segment results, which is again given to us. So segment results, this is the total revenue. Then we can put the information for segment results. Please understand that in this question, segment expenses as required are not available. And segment results, which we would have computed otherwise, are given in the questions. So that's why we are putting it on the basis of the information given in the question. 240. -13 minus 12. So all in all, this will become 258. Okay. Then comes the next item, head office expenses reallocated. Head office expenses. Do we need to allocate them? No. Head office expenses will go to the corporate category straight away. 144 is the total amount. Head office expenses. But these are not specific to the segment, so that's why we have taken it to the company as a whole. So the head office expenses is not 144. Sorry. After reducing this, what do we get? Operating profit. So what do we get in the operating profit? 114. 114 is the operating profit. Yeah. Then comes the next item, interest cost. Interest cost should go out again. Yeah. But do we put this information of interest under respective segments? No. These are not taken to respective segments. So where do you take it? To the corporate level. What's the corporate level? Company as a whole. So what I do is I just put this information over here. You can just continue with the same part below this. I'm just doing this for the purposes of space. So we get this information of operating profit of the interest cost. Operating profit is 114. Interest cost is 16. So what do we get? So we get 98. 98 is the PBT, profit before tax. Okay. Now, do we have any information related to tax? No. If the information related to tax was available, we would have put that over here. Fine. So, as around the information related to P&L, we have put down everything. Now, what's the next thing? Next thing is about the information in relation to assets and liabilities. So, we'll begin with assets. And these are all segment assets. Segment assets. So the question has used the term fixed assets. Even if question uses the term fixed assets, we should change it and we should make it PPE. Okay, by chance in the solution it is not given, but you should correct it. Make it PPE because now the term which is used is PPE. It's 360, 180. 360, 180. Okay. And this is 540. Yeah. Then the next information is about net current assets. Net current assets 118, 16, 135. What do we have? 375. Yeah. So the total segment assets that we get over here. Total segment assets will be what? 480. This will be 120. And this will be 315. This will become 915. Now, if you see in the question, PP and net current assets of head office are also given. And if you look at the total assets of 540 and 375, they will not match the balance sheet. Why? Because the balance sheet number will be after considering all. Now for matching this, what do we need to bring in? Unallocated corporate assets. So we have some unallocated corporate assets. 75 and 72, which will go straight away over here. 147, which will make the total assets as 1062. Okay. Yeah. 1062. Now this is the number 1062, which will match with the balance sheet. Remember the reconciliation with the balance sheet with the P&L is required to be given. Remember that reconciliation? Yeah. So this is what this reconciliation is like. If you put down the information up to this point only, there's no doubt that the segment information you have given is correct. But why is this unallocated asset part required to be brought in? So that we can make the user understand that out of the total assets 1062, assets amounting to 915 are belonging to these three segments, and assets amounting to 147 are not allocated to any segments. They belong to the corporate. Yeah, clear? Clear on this part? If you have any questions, please let me know. Now moving on to the segment liabilities. Segment liabilities. In relation to segment liabilities, we have got long-term liabilities. Long-term liabilities. Long-term liabilities. 30, 15, 1. 30, 15, 1. what do we get? 225. And here again, we have got some unallocated corporate liabilities. Unallocated corporate liabilities, which will go straight away to the total 57. So what do we get? We get 282. 282 is the number of total liabilities. Total liabilities means those liabilities which are taken to the balance sheet straight away. Kushi has a good question, I would say. So why the head office expenses are not shown separately when its bifurcation is already given to us? See, as regards the head office expenses, its allocation is given to us. There is no doubt. If all of you go to the question, its allocation is given. And similar manner, if you see, allocation of interest cost is also given to us. But do they really belong to a segment? No. So can we therefore put it under the segment? The answer is no. Clear, Kushi? Yeah? Okay. So now this entire disclosure that we discussed was about the primary segment, which was the business segment. So maybe on the top of this disclosure you can write it. And there are no adjustments other than acquisitions. Fine. But as per the accounting standard, wherever we have got any disclosure in relation to a business segment which is becoming a primary segment, we are also required to give the disclosure for secondary segment, which will be what? Geographical segment. And now in this case, do we have any information around the geographical segments? Yes, there. And you may say, but sir, this information is very limited. No problem. Whatever information is available, we will disclose. There is absolutely no problem in this. Okay. Yeah. Clear? Sanjay is saying, but sir, if you look at the segment assets and liabilities, they do not match. And this is because you don't have the complete information which is available. See, basing the information which is available, you have given the disclosure. If the question has got the limited information, there is absolutely not a problem. If you look at the disclosure requirements, do you think we have covered each and every disclosure which was required by the standard? No. Why? Because we'll give the disclosure only to the extent information is available in the question. So don't worry about it. Fine? Yeah? Okay. Next. Next is about the disclosure on the basis of geography. Or we can say disclosure in relation to secondary segment, which is a geographical segment. Yeah. So now let's go to the question and see what all information is available. In the question, in relation to geographies, we will see sales to Rwanda, sales to Maldives, export sales. This much information is available, which is in respect of geographies. Correct? So that means we can only put down the information related to sales. Yeah. And the information related to sales, once again, is the one which is for external parties only. Yeah. So now, what's the information which is available? One, export sales by forging shop division. Export sales by forging shop division. This is available. What's the amount? 6135. Domestic sales are also available. So this is again on the list of geography. It's 90. Then export to Rwanda is again given to us 300. Export to Maldives $270. So total sales, the consolidated amount. Do we have that? Yes. It's 679. 679. Okay. Here. Clear on this part. If you've got any questions, any doubts as around this, please let me know. So before I move further, let's quickly have a discussion on this. Any questions, any doubts you may have on this, please let me know. Yes, over to you. Yeah, I'm waiting for a response. Any questions, any doubts in case you have on this, please let me know. Manish is asking, sir, in the primary segment, we haven't we haven't need of reporting segment criteria. No, it's there, but in the information which is available, the reportable segments are given to you. Yeah, that's why you are not getting it. Sanjay is very much clear on this. Anushka is clear. Kushi is asking. Oh, I think that point is clear. Kushi is also clear on this. Great. So if you are all clear on this, then I think we can move on to the next example. Okay, fine. And the next example, I'm not going to solve this. All of you need to solve this and let me know the answer. Okay, yeah, you'll do. So illustration number 3. I'm coming back to this illustration. And you might be wondering, sir, why we are getting into it? Because This was the homework. This was the homework, but if you remember, I told you there are few more concepts which have been used in this illustration, which we hadn't covered last time and which we have covered today. So hopefully some of you who have not been able to solve this will now be able to solve this. Yeah. So quickly, if you can move on to illustration number 3 on page 1.6. Illustration number 3. I'll read out. Yeah. XYZ has 3 segments. X, Y, Z. Total assets of the company 10 crores. X has got 2 crores. Y has 3 crores. Z has 5 crores. Out of the total assets. Within these total assets, deferred tax assets included within these total assets are X 0.5 crore, Y 0.4 crore, Z 0.3 crore. You are required to check out of these 3 segments which all are reportable. See, the questions like this, I would say you should expect in the exam. Ashit, as I told you, all of these discussions that we have been doing, all of these pointers that we have been discussing, these are all notes going on. So you don't have any separate set coming up for that. Yes, these are all notes. Yes, quickly. If you can start with this without looking at the solution, of course. Sanjay is saying, sir, illustration number 3, I completed. Deferred tax assets and liabilities, those are required to be adjusted. Okay, so let's get on to this. Let others also solve this. Okay, then I can see this response from Aryant. Aryant is saying all the segments X, Y, and Z are reportable. Okay, great. So Aryant seems to have solved this. What about others? Quickly. What about others? Yes, I'm waiting for a response. Which out of these are reportable? And you can also let me know briefly about the adjustments, if any, have been made by you in relation to assessment of the reportable segments. Manish is saying in this example, tax assets will not be included and all the segments are reportable segments. Total assets we will consider as equivalent to rupees 8 crore. Okay. What about others? Very good. Manish has briefly covered all the points. Huh? Very good. What about others? Kamal is saying all are reportable even after adjustment. So now this is one of the points which you need to remember, that in the exam you will have to consider all the adjustment. Yeah? You cannot just overlook. I'm not saying that you're doing that. Just be cautious of this point. And that's why illustrations which are of the type of illustration number 3, okay, you can say questions similar to what you see in case of illustration number 3 are what you should expect in the exam. Because this is not simple, it has got some trick which is involved, and that is where most of the students make the mistakes. Yeah? Quickly. Let me just see if others have been able to solve this. As I told you, I don't plan to solve it. If I get your answers correctly. Nakul is saying all are reportable and segment assets will not include income tax assets. Okay. Priya is saying all are reportable because we don't include the tax assets. Okay. Rangajula is saying, sir, I had this problem and I have a doubt in this question. They have given deferred tax. It is a liability. If it's a liability, it should be considered as an expense. So expense should be deducted from the revenue. See, why you are saying it's a liability? Question has clearly specified this to be deferred tax asset. Okay, I think you're saying that in case the question is heavy. Okay, so in case the question is, then you will add it to the total, because then your total assets will increase. That's how you will adjust it. Very simple. Anushka is saying tax assets should not be included. Very good. Kushi has also solved this now. And Kushi has shared the computation also. Very good. All the segments are reportable as they all are more than 10% of the total assets. After adjusting deferred tax, as it does not form part of segment assets. Very good. Sakshi is saying total assets are 8.80 crores after excluding deferred tax assets. All the segments are reported. Jamil is also saying all are reportable as it's 10% of 10 crore. And after deducting tax, all are above 1 crore. Anushka is saying all the segments hold more than 10% of the total assets and therefore all are reported. Very good. So I think Rama has got a different answer. Rama is saying X and Y are reportable. For some reason, Rama, you need to check Z also. And you need to tell me why Z is not becoming reportable. Because in this case, the only trick was the inclusion of deferred tax assets in the total assets which are available. Yeah. And because of this, all the segments will become reportable. The moment you make the adjustment, you will find that all the assets will become reportable. Yeah. So clearly, we can say that any adjustments which are required to be made should always be looked at while you analyze whether the segments are reportable. So this is one point we didn't discuss last time. Yes or no? Yeah. So whenever you will look at the segment assets, segment liabilities, segment revenues, segment results, wherever that is required to be assessed, that will be based on an understanding of those terms that we have discussed today. For a company as a whole, each and every asset or liability you will consider. But for that particular segment, you will go as per the requirement of the segment. Yeah. Aditi is asking, sir, if there was deferred tax liability. See, if there was a deferred tax liability, and let's suppose all of these assets, or the total of these assets is given to you. Net of that deferred tax liability. Question should specify that this is net of deferred tax liability. Then what will you do? What will you do? You will add that. But that will not happen. Please understand why. Yeah, I can understand where are you coming from. So your concern is correct, but you will not see this happening in the question. See in a balance sheet whenever you will have assets or liabilities. So the total assets that you will get, that will be the one wherein deferred tax assets would have been added. So if the net number of the deferred taxes asset, only then it will get added to the total assets. If the net amount of deferred tax, let's suppose happens to be liability, so will it get added to the total assets? No. Understood? Now clear on this? Yeah. Go back to the discussion of AS22. Yeah. So only and only when it's a DTA, it will come over to. It's a DTL. It will not come over here. Right? So that's why I'm saying if the question specifies that this amount is net of DTL, then you will have to add. Otherwise, fine. Kushi is asking, sir, will you not take AS14 as today is our last class for accounting standards? See, AS14 is the one which will cover along with amalgamations. Yeah, so that will automatically get covered. Similar to AS21, which will get covered with consolidation. Fine. Okay, Rama is also clear. Rama is saying yes, all the segments are reportable, X, Y, and Z. Okay, I think Harshit has some voice problem. Hi, sorry, due to some technical glitch, it got disconnected. So I was just looking at some of your queries. Okay, so with this, anyways, we have come to an end, and sorry for this video interruption. And just to clarify, because if by chance there was any audio video problem, it's all done now. We are done with the accounting standards, and we are done with all the accounting standards which were required to be covered at your level for this exam. Yeah. So some of the things which you need to remember about the accounting standards before we wind up our discussion. First, in relation to the accounting standards, please remember that the concept is very important, so don't get into mugging of all of these things. If you get into the mugging of all of these things, this will really bother you during the exam, and some of these concepts which you would have found easier may become very, very difficult also. Number two, try to practice questions and look at the study material, past year question papers. Yeah, that will help you to understand the concept in a better manner and will give you more clarity around it. Third, whenever you attempt these questions in the exam, please go through the question carefully. And please ensure that when you give the solution, you are also giving the basis of your assessment. Because in case of all of these questions, It will not be the computations which you will be required to do every time. Many times you will be required to do the assessment and you will be writing the stuff. Yeah, but this is again practical. Yeah, so that's why it's very, very important for you to these facts. Yeah, as around some of these points which we have discussed, it's again which is about some of your queries which may come over. So though we have tried to address all of your queries during the session, but if you still believe any of your queries left out, you will have sessions which are coming up. Therein you can discuss the queries, or you can also post your queries to the relevant team over there. Yeah, they will be happy to get back to you. So with this, we can just conclude our discussion for today. Yeah, and I'm hoping that you will be practicing this more and more. And with this, wish you all the best, and thanks to all of you once again for your time today and for these sessions throughout and for your participation. Thanks so much. Yeah.